With gold and silver prices fluctuating, understanding market cycles gives you valuable insight into where prices for gold, silver, and other metals will go. Market cycles help gold and silver investors not overreact to price changing either direction. If this is of interest, stick around. I've got 25 minutes worth of content that I'm trying to squeeze into 12 to 15 minutes, so let's talk about it. In our last video, we looked at the market, the volatility, and really came to the conclusion that while PM prices have been under pressure and may retreat further, we're actually fine, and not FINE, fine, because all the fundamentals for this precious metals bull market are still in place. We discussed that there's lots of cash sitting on the sidelines still. So today's video, we're going to focus on the technicals of the market by looking at the gold and S&P 500 charts in the context of the anatomy of a bubble theory. Before we get into this, let me be very clear. I'm not a pure technical analyst. I am extremely far from that. And frankly, I have zero desire to be an expert in this area, as there are plenty of people out there in the world that can provide this service or support me. However, to be a good investor, I do need to have a solid understanding, which is what I want for you as well. No, I don't spend my time looking at stock charts or reading candlesticks or anything like that. And I'm not sure you really need to do so either. When I say technicals, what do I really mean? I'm going to give you the definitions from Investopedia. Technical analysis is a trading discipline employed to evaluate investments and identify trading opportunities and price trends and patterns seen on charts. Technical analysts believe past trading activity and price changes of a security can be a valuable indicator of the security's future price movements. I want you to think back to high school biology class when we started using microscopes. Remember the various lenses we had? We had the 4x, the 10x, the 40x, and 100x magnifying lenses. Most of us spend a lot of our time following precious metals, which can be like using the 100 times lens. So today, I want to switch our magnification lens from 100 to maybe 10x or 4x, as that is what I'm trying to do when I use technical analysis to help me understand what's going on. Sometimes we just get too close to a topic that we can't see the pattern, like the saying, can't see the forest for the trees. So if we agree with the thesis of the last video, that all of the fundamental pinnings for the bull market are still in place, then we need to try to figure out and understand why prices have fallen from the highs we saw a few months back. I think the answer can be found in my favorite technical, or let's just call it a theory, anatomy of a bubble. I love this theory so much because it takes into consideration human psychology, and it's really built in to help us understand what we're experiencing and what we will see. What's also great in this theory is that it contains answers for us as to what we're seeing in the stock market as well. So take a look at the screen. If you watched all my videos, you've seen this briefly before. Relax, relax. No, I'm not going to shamelessly plug that video. Yeah, right. By now, you ought to know that I have no shame. Regardless, I shared briefly this theory as a way to discuss how and why I would sell my precious metals. So let's dig a little deeper today. As a quick recap, let's just talk about the 5 stages of anatomy of a bubble developed by economist Hyman Minsky. And the 5 stages are displacement and excitement, boom, euphoria, profit taking, and panic. So with displacement and excitement, this is where people start to fall in love with the product. And then you have your boom, where prices really start to take off and they gain momentum and more people enter the market. FOMO starts to kick in for some folks, and that only brings more people. Euphoria is kind of like that last jolt of the final investors coming in. Kind of almost close to that greater fool theory kind of concept. And then we get profit taking. This is where smart money starts to get out saying, hey, we've seen this, we've been here. And then panic. This is when it's all coming to a terrible end. The bubble has popped, smart money is gone, regular investors are left holding the bag. Now I'm going to show you how I use this kind of information, data, and psychology to help me make better decisions, not suffer from FOMO, and ultimately sleep better at night. As I shared in the previous video, I noticed something a week or two ago which made me say to myself, hey, don't you try and catch a falling knife. This theory is part of what is allowing me to sit patiently impatient on the sidelines. This, with a basic understanding and ability to study technical chart patterns, is why I feel strongly that 715 or below is quite possible, especially with the lack of real capitulation in the stock market. Remember, for weeks, I've been giving you numbers to watch out for. I started saying, hey, watch out for 920 or 1900. That's where I last bought. Even though I was saying, and I fully expected it to pull back to 1880. Then I said, okay, 1880, 1850 is very likely, folks. Then I said, well, 1820. And I'm fully expecting 1750 or maybe even worse. So you know, I will start sprinkling in around 1750. Now, I might be right, I might be wrong. But after this video, at least you'll know what I'm thinking, what I believe I may be seeing, and why I'm making the decisions I am. Again, this is a part of the skill set I want you to develop. If you're finding value in this video, go ahead and hit the subscribe button, because Stackers is here to help you get the most metals for your dollars, and I don't want you to miss a single video. Plus, it helps the channel grow and get out to more people. Also, give yourself and me a thumbs up for taking the next step towards greater wealth by clicking the thumbs up button and checking out the new animation that comes with it. Let's start by looking at the S&P 500 from 2009 to today. And you can see in this chart that the gray shows you where we fell off in 2008 and what the market has done. And just take a look at the pattern. What I've done in this next slide is I've basically taken that S&P 500 chart, which is the dark black line, and I've overlaid it on top of the actual anatomy of a bubble chart. And you can kind of see some things going on, but it really doesn't work very well. So I need you to use a little imagination with me. And in this next slide here, what I've done is to kind of try to line it up for you and show you where in the actual chart and where we are in terms of the model. And so you can see that little arrow kind of saying, okay, here's where that first bear trap, that first sell-off took place. And then I've circled at the top where it looks like we hit the top of the market and then what starts to happen from there. And so as you can see here, if we believe in this theory, then we've had our nice big run up. We've had all kind of media attention, enthusiasm, all kind of greed in our markets, which has led to the everything bubble and the greatest bubble we've ever seen. Now you start to see a little bit of a drop. Now the question will be, will it bounce back up a little more and then continue to drop? Or will it just flat out drop and have the bottom fall out? I'm not certain, but that's what we're looking for now. The next slide here I have is I'm showing you a closer look of the S&P 500. So we saw that big picture, and now I'm zooming in here a little bit, and we have the S&P 500 and the 2020 medical event. And what I really want to show is that it could be misleading to think that that 2020 medical event was a part of the normal part of a chart. And I want you to kind of ignore that, because that was a unique situation, right? We don't normally have medical events like this in our lives. So I've put a box here on the top right here because I want to kind of show you what may be the topping pattern, right? That we've gone up, we hit our highest high, we pulled back, and then we had a strong rally. And then we just had to get beat down for several weeks here. And these are week-long candles. And if you kind of remember back to that actual chart, we see it go hit its high, it goes down, it tries to rally back up, and then it gets beat back down. And even in the chart, it talks about it being a bull trap, which is what I've shown you here again, just kind of refresh your memory. So that's where I sit and I go, all right, it looks like if things follow their normal cycle, we've got to have a major sell-off in the stock market, and we've got to get to fear and capitulation. And I think that maybe we're starting to see that. And I think that's why we're also starting to see some of this impact and spill over to the precious metals market. The next slide here I have is a chart of gold bull markets from the 1930 area, 1970s, and the early 2000s, and the current one. And what they've done here in the bottom is in this kind of like greenish line, it's a little messy, it says, we are here. They're kind of projecting out what's going to happen in the market. And you can see that we are very early into this. And what they're telling us is that this bull market started in 2015. And I share that because in this next slide, what I've done here is kind of charted on weekly candlesticks from 2015 to today. And it's not super clean, but you can see that since 2015, we've had a nice little start up here of movement and kind of almost a takeoff is what the other model would say. And now we've kind of hit this little bump here, and we start to see kind of our first sell-off. And this is what the chart refers to, the model refers to as kind of the bear trap. I think we're somewhere in here, folks. I think that what we're seeing is this first sell-off and the bear trap being amplified by the collapsing of the stock market at the same time. And so in this next slide, I've taken that same gold pattern and basically overlaid it over the model again to try to give us a sense of where we think we are. And you can see that, hey, it actually almost lines up in some real ways. And what's really powerful for me is when you look at this model, and the first part, it starts with smart money, and I put a circle around this. And smart money is the one that makes all the accumulation in what they refer to as the stealth phase. Well, wait a minute. Who's been buying gold for the last 5 or 7 years super quietly, and that we're only really starting now to understand that they have been buying? The central banks, the super smart money. Smart money has been well ahead of us, and they were buying at great levels. And now there's an awareness phase, and we're starting to see more people get interested. We have institutional investors. Now, we still have lots of cash sitting on the sidelines, but regardless, we're still in that institutional investor or awareness phase. Now, we haven't hit the phase where we're starting to get media attention or any kind of enthusiasm and people aren't talking about it. So we're not in that mania phase where we're going to start to really take off. But I think what we're seeing here, and as I show in the next slide, I've tried to overlay here the S&P 500 and the gold markets. So the S&P 500 from 2009 to present. And I have that double arrow there for you to kind of see where that bear trap occurred. And in some ways, you can almost argue that that bear trap occurred twice. So if you look just to the left of that dip, there was a very similar one a little bit earlier on that S&P 500 chart. And if you look at the top right, you'll see where I circled the top and that things are kind of having their little bump and we're starting to maybe see this sell-off. And I've given you that little yellow highlight to say, hey, that might be where we're going and where we need to go if the model is actually accurate. And we feel pretty good that it is. With that, we have the gold 2015 present chart, and you can see that it's kind of lining up with the bear trap as well. And so all of this is why I'm sitting here going, it looks like we might have that stronger pullback that may take us to that 1750 area. I believe that capitulation and that real hard sell-off in the S&P 500 and in stocks is actually going to be a part of what actually drags us down, which is going to be a phenomenal buying opportunity for us. But I just want to introduce this and start to get you to think about this and look at this model, because I believe it gives you tremendous insight without you having to be super nerdy or super technical and digging super deep into what's going on in the market. These are the kind of indicators and things that I use that help me get a sense of what's going on. In the comment section, I want you to focus on the anatomy of bubble and share what you got out of it. Do you think I lined up the indices correctly? What do you think happens to metal this week? I want you to share those comments for me. This video shout out has a bunch of different folks in it because there were so many great comments. If you're not commenting, responding, or reading the comments, you're missing out. I have to tell you, I think stackers, we have some of the smartest stackers in the world in our community. Your insights are fire, and some of your comments are just downright hilarious. So I'm just gonna read quick little pieces of these. NJ Stacker, I love this part. Watching the market is like watching Nero fiddle while Rome burned. It got real hot, but when the embers cool, those with means were better off than those just stumbling around in shock. That is what gold and silver will mean for us. And then he goes on to talk about prices falling. He also asked me about the actual crystal that was in the video. I wanted to just kind of share that was a smoky quartz. Thank you for noticing the crystals. Mrs. Stacker loves her crystals. If she's around or paying attention when it's recording time, she usually will come in and sneak a crystal into my layout for good energy and to give you all something else to look at. And so today's video, actually, we have a nice little piece of, I actually don't remember it anymore, but what I do know is it contains copper. It's a slab of copper and something else. Thanks for noticing that. Then we have Albert, who I can't even read all this. It's a fire comment. He really breaks down what's going on, and just talking about gas prices and wages. And so again, y'all, you need to be reading these comments. Peter Pete jumped in, talking about looking at the 100-year gold chart. That's what we're doing. Moderate had me just dying. Can't help myself, but these conditions make relapse. I have to buy. I know that Germitis, folks. You got to have real money. It's real. It kicks in, folks. And hold tight if you can, because I think we're going to have a really great buying opportunity, and I want you to have some dry powder. Tominator Z, if gold hits 1,700, I might get a kilo. To which I responded, shoot, I might sell my car and Mrs. Stackers. Just kidding. Laugh out loud. Well, she didn't find that very funny. But anyway, thank you for seeing this video all the way through. You are my A students. I hope you received tremendous value from this video. If you did, I want you to get into those comments and answer those questions, and also comment that I did. Also, feel free to give any feedback or ask any questions that you may have. We still have the opportunity for you to buy the gold bar at spot if you're interested in that. And in fact, I haven't updated this graphic, but I did speak with Joshua Morgan over at US Gold, and he said you can absolutely use it to purchase a 10-ounce bar at spot. Get a great deal, and he does give back to stackers to help support the channel. Always stack smarter and never stop learning.